Understanding the bias is one of the most important skills that traders need to master, because without understanding when the market is going, it is very hard for us to predetermine the places on the chart where high probability setup will appear, and it is very hard for traders to identify the key entry point. And when I'm trying to identify bias in the market, I follow these three factors. I take into consideration what the structure is, I pay attention to EMA, and I follow the trendline rule. Now, right from the very beginning, the bias is very easy for us to identify because it is indecision. This is a trading range. Prices are swinging up and down consistently. This 21 bar exponential moving average, this blue line, is for the most part flat. And once you see this, you're playing the trading range rules, and at this point on, there is no bias. You're just following the short-term trend lines and paying attention to the market extremes inside of this trading range. Now, notice what happened next. There's a bullish imbalance and market is reversing to the upside. Now, according to trading range rule, most breakouts of trading ranges will fail. But there is a point in price action when the new trend is so strong on its own that is already way too far above the initial trading range, and you're not looking for prices to pull back. You're paying attention to a new structure that is developing. So what is the structure here? By the time we're already up to here, we're too far from the initial trading range. So structure is we keep pushing higher and we keep creating series of higher highs and higher lows. EMA is pointing up. It's no longer flat, it's pointing up. And the last thing is I need to identify the trend line. So I'm going to identify the trend line because market is always following some pattern. Candles are never alone on the chart without a pattern. So at this point on, you guys can see how nicely this channel is fitting, and the bias is bullish. Now, I know that the bias is bullish. That means I'm looking for a high probability setup at the key entry point to go long. And a high probability setup to go long is a two-legged pullback at the key entry point, or failed two-legged pullback, failed second entry short that goes against the trend. So we have an uptrend working higher. We have a first break for the uptrend. Bias is bullish, and I expect after break to get new extreme according to trendline rule. Now I have to follow the shortened downtrend as well because the trendline rule applies even for the corrections, and these corrections will filter a lot of losing trades, because if you have this correction in play, you don't want to go long only after you have a break and a new extreme form. That is how you know that you're safe to look for longs. Now when I was watching this, unfortunately, I had my trend lines a little bit tighter like this. I didn't extend it on time, so I had to break a new high. But what I did wrong is I disregarded these first few swings. Notice the nice geometrical formation, how the trend line is really setting up nicely, and it's also holding nicely and off the highs as well. So I misjudged it, did a slightly, and for that reason I didn't take the second entry long. But if you're looking at the wider pattern, which fits much better, EMA keeps holding prices, and even though it is a little bit stacked, because you got 3-4 bars stacked, you're still above EMA, decent bar, and you expect to get new extreme. So the bias is bullish, and this is a second entry long at the key entry point. You're not interested in chasing the market or taking first entries. You can see what can happen if you take a first entry, and even though market is working higher, anytime it can reverse and backfire. So you only want to wait for prices come to your key entry point. That is where the high probability setup will appear. So now that we have a break and new high, we expect correction or straight up reversal. But at this point on, it can still look fairly bullish. The structure is still bullish. EMA still keeps pointing up, but the trend line rule played out. So something is different here. Market cannot keep getting higher like this because this is very steep. Notice how steep this uptrend is. This is unnatural. It needs to correct. So this is so steep that I expect correction or possible reversal. And notice what is happening. EMA is flattening, and we're no longer creating series of higher highs and higher lows. In fact, we have lower highs and lower lows. So it looks like we may eventually reverse. Now notice the setup we have here, which is a little bit more advanced. I'm going to mark because we have a new high, first entry long, pullback, second entry long. A lot of traders are getting trapped taking a second entry long, but this second entry long, notice the difference. It is not at the EMA, it's far from it, which EMA acts as a magnet that you will pull back, and also uptrend played out. You have new high. Here you expect to get a new high. So this is great trap, it's a little bit more advanced, but it's a failed second entry long, triple top, far away from EMA, you're probably going to pull back. So a little bit advanced, but it's a great entry. Now, I don't think we want to go short just yet because it's a little bit unclear here. EMA flattening, it's looking a little bit too sideways. Only after market is pushing below EMA. Now you have to identify again what the bias is. So the bullish bias played out, correction, and notice EMA is starting to point down, series of lower highs, lower lows. So I'm going to redraw my new pattern down, and from this perspective, bias is bearish. And notice I have to draw the short-term corrections. We have a break of the uptrend, new extreme formed, telling you that it is okay to sell, and you have a first entry short, pullback, second entry short, and you also have strong resistance here. Now this signal bar is not great, so I will mark it. It is a little bit aggressive in my liking. Also, I had to break a new low, small little break a new low. For that reason, I was really hesitant here. What I like is that the triple top or the large double top is holding, EMA keeps holding, the uptrend played out with the break a new high, telling you that it's okay to sell. Had this signal bar been full bearish, I would like it, but with the bar being like this, a little bit slow momentum. But notice what is happening. Did the bias change? No, the bias hasn't changed, because EMA keeps rejecting prices. We keep creating lower highs and lower lows, and I'm going to find a wider pattern because we had a break a new low, but we keep creating new low. So I'm going to find a wider pattern. I need to keep drawing the short-term trend lines. So once I'm watching this, and this is only a first entry short, so I cannot break the rule. Even though this worked, this is just a first entry short. So at this point on, notice all of these three factors are working together and the bias is clearly bearish. But notice what happened. Price is strongly pushed above EMA, and this is how you're using the EMA. Notice how EMA keeps holding here. So this is telling you it is safe for you to go long, and EMA is rejecting price here. This is telling you it is safe to go short. As long as prices stay below EMA, you're thinking bearish. And once prices push above EMA, something is changing. The momentum is changing. Probably entire bias can change. You don't know. You're just more alerted that something is changing. And this was caused by the news. This is very unnatural, but this completely shifted the entire bias. Because this uptrend played out with the break new high, we're not creating a strong downtrend, and we're strongly pushing above EMA. So that means if I'm going to zoom out like this and take into consideration this entire structure, doesn't this look too bullish? It does. So I'm going to use these first two swings right here. I'm going to connect these three swings. Just going to copy it, put it at the top, and this makes sense. From this perspective, the overall bias in the market has been established and everything has changed. At this point on, I'm mostly looking for longs. Throughout this entire area, the bigger pattern was just under development, and I can pay attention to the short-term patterns and even to this downtrend. After this bounce and strong push above EMA, everything changed, and the bias right now, the main bias for the day, is bullish. Structure, you keep creating overall higher highs, higher lows. The trend line is in play, and EMA is not going to be such a factor because it is such a wide pattern, so you can keep going sideways or potentially slightly lower because there may be corrections because the big pattern is so big that the EMA can change. But still, the EMA for the most part is trending higher, and notice how the key entry point is coming nicely into play. So every time someone tells you the market geometry isn't a real thing, they just don't know how to draw the trend lines, because it is a skill that can be mastered, but it is a skill and it takes time to learn. So as prices are pushing higher above EMA, this is where I have to redraw the uptrend. And notice what we have, a massive overshoot, and this is caused by the news. And you can tell that this is unnatural activity. Overshoot can lead to a break of a channel or possibly straight up reversal. So once I see overshoot like this, I'm going to measure it. And this is my first target where I expect prices to go. You guys can see perfect measured overshoot. So you can expect break or possibly straight up reversal. Do we expect reversal after this overshoot? Not necessarily, because main pattern is very bullish. So we're most likely just going to break and get a new low. Can I take second entry long? I cannot. After overshoot, I need to wait for a higher low, but even then, EMA is flattening, we're going sideways, and this downtrend is in play. It worked here, but next time I'm going to go long here, it will trap me and it may fail. And you guys can see, it was not too long before price created a new extreme that was needed, and only here, now you're getting the idea that it is okay for you to start buying again, because new low was established in the market. Now after new low form, notice price strongly pushed above the support and gave you new high, first entry long, second entry long. Now, this is not a bad entry. It is a little bit advanced. I saw a couple traders took it. I'm going to mark it. It is very advanced because you need to know what you're doing. You need to pay attention that the downtrend played out with the new low. You need to take into consideration the entire bias, but it is a nice high low, second entry long, support keeps holding. When I was watching this live, I wanted to take a failed second entry short. I wanted for prices to trigger below this second entry short, trap everybody going short and reversed, but there was no trigger here. So this is just bullish bar without actual trigger, without actual failed second entry short. So unfortunately, you just have to sit here and watch it. And by the time you get a little bit higher, you're way too close to this resistance and you have first entry long, second entry long. There's a two-legged pullback, which is a high probability setup if you combine it with the key entry point and the overall bias. But it is way too close to this resistance and you can see what can happen. You can get barely out before market reversing down. Okay, so even though there's a two-legged pullback, you have to be patient. So even though the clear bias today is bullish, it was quite hard for us to get a setup because they just didn't form that well for us to take them. So what is the shortened bias? Shortened bias is trading range. Just like here, the trading range is forming because EMA is flat. There are no higher highs or low highs or anything like that. It's just sideways. So shortened bias is trading range. But for the most part, the main pattern, the main bias is still bullish. There is pretty much nothing else to be changing. The bias is bullish. Notice what we had. Prices came back, tested and confirmed the key entry point to the T, and also prices broke below this consolidation. This is a trading range. This right here acts the same way as right here. This is just a smaller form of a trading range. So the trading range rule apply as well. Most breakouts of ranges will fail. If the breakout breaks to the upside, are we going to fade it and sell it? We're not, because the main pattern is bullish. But if it breaks to the downside and we fade it, I'm fading it with the entire direction of the trend. So this is a decent entry to take. Once again, a little bit more advanced because this is not a textbook two-legged pullback. I wanted to see second entry long when I was watching this live, or possibly some push above EMA. I was a little bit too careful and hesitant here. I was supposed to pull the trigger because, not because it is a confirmation of the trend line, but if you combine it with the failed breakout out of the trading range, this makes sense. But you'll be taking a risk here. This is not one of those clean high probability setups like you're taking a two-legged pullback at the key entry point. You're definitely taking a risk here, but from the price action perspective, this is a decent entry. Now market kept pushing higher, and by the time you get higher low, you're too far up and you don't get even close to get a good failed second entry short. Now you have a small break new high and market is reversing. And notice, I want to bring your attention to how market is working. Markets can never go straight up or never go straight down. Market need to have pullbacks in between, and you need to make sure you're buying at these lows. You're buying the pullback phase, or once it bouncing to the upside. You cannot be buying the exhaustion phase, because you can see what can happen. If you buy second entry long here, second entry long here, or second entry long here, it's too late by that point. A lot of times traders can get trapped taking a late second entry long in the exhaustion phase, but you're really supposed to be buying in the pullback phase as close to the key entry point as you can. Fortunately, there is no good second entry long here, so you don't get trapped. But once you see breaking new high, and it feels like the market is losing steam, you're probably going to reverse and pull back down. So what is the bias here? Still bullish. Shortened bias is bearish, but that's so short term, I'm not even thinking about selling. Overall main bias in this market is still bullish. We keep creating higher highs, higher lows. We got the trend line rule still in play, and the EMA for the most part is pushing up and holding prices. Now, I was about to go long on a failed second entry short, because notice how key entry point keeps holding again. But notice the congestion, 10 bars stacked next to each other, a lot of stims. I just cannot force. Almost went long here, but I cannot just force here and break the rules. By the time you push above EMA, you're too far from the exponential moving average, because we have a new low, first entry short, pullback, second entry short. Once again, not a bad entry at all. The bias is in your favor, everything is in your favor, but you're not touching the EMA. So not a bad entry, but I really would prefer prices to touch the EMA. The market was very slow at this point. In hindsight, looks good. If there was momentum, maybe, but when you're watching this live, the market is slowly but surely crawling up, and you really need a convincing entry. Today market was extremely slow, so there was no convincing entry. Notice you have a break, 2 legs to new extreme, and you get new high, first entry long, second entry long. And at this point on, it's too late for you to go long. Uptrend played out, and notice how the bullish move up is getting smaller and smaller, and you can see that the market is about to tilt. You're going into a wedge where the resistance keeps holding, the trend line keeps holding as well, and this is too congested, this is too messy, and you got to be careful not going long once you get into this wedge. The trend is losing steam. Once you see so much empty room at the top portion of the trend channel, this is telling you that the market keeps reversing. Notice how these pushes to the upside are smaller, smaller, and smaller. This is telling you that the market will eventually break the main trend line. So the bias throughout this entire market is still bullish, but notice what is happening. We're breaking the channel, and right now we are changing the bias. We are no longer creating higher highs and higher lows, but we broke the trend line. We're below EMA, and we keep creating lower highs and lower lows. So short-term bias is getting bearish, and I need to respect that. When I was watching this, I expected to get pushed above EMA and to get reversal pattern. That never formed. And when you're watching price action, remember, bigger patterns may get longer corrections. When you have gigantic pattern like this, you don't want to be going long too quickly because there needs to be a longer correction. That's just how it works in price action. So once we had a break in new low and we didn't push above EMA, EMA kept rejecting price and we pushed below, I reassessed the bias, took into consideration these 3 factors. And what is the bias? Lower highs, lower lows. EMA keeps rejecting prices, and at this point on, I need to extend the downtrend because this is way too short. When you look at the price action, this is way too tight, and the correction is probably going to be a little bit bigger. Also, what has helped you to understand the market, because it's first leg up, second leg up, and it didn't push above EMA, it continued pushing lower. So this is telling you there's probably more bearish momentum, and the short-term bias is bearish. And we have second entry short, lower high confirming the second entry short, decent high probability setup. It was a little bit too stacked, but confirming second entry short, great bearish bar. It ticked higher, it's a little bit reversed down. EMA kept holding. You probably need to create new extreme. New extreme was formed and prices pushed above EMA. So once prices are pushing back above the EMA, and now we're creating higher highs and higher lows, we're above EMA, no longer below. So that means that I expect to get new high for the main pattern. The overall bias, the bigger bias, is resuming. And if we stay above EMA, even the short-term bias is going to be bullish. So I was watching for failed second entry short. Same thing I was watching here, I'm watching here. New low, first entry short, pull back, second entry short. I'm looking for a second entry short to fail, and it indeed failed. EMA kept holding, trend line kept holding. I took this entry from 2500 tick chart because the signal bar here is really bad. It looked much better there, so there is not really a great entry here. But I took this entry, my only trade for the day, on a 2500 tick chart. Both key entry points holding price. You expect to get new high, bias is changing, and then you had new high form, first entry long, second entry long, 2-legged pullback, 2 legs down. EMA keeps holding prices. I'm going to mark this entry. It is not a bad entry, it's just a little bit closer to these highs. But once the signal bar is so full bullish, it's definitely worth the chance. And you guys can see we're getting very close to the close. Once your short-term trend line has a break in your extreme, pay attention to how EMA is reacting. That's how you will recognize that there may be a more potential in the trend. Because just like here, the short-term trend has a break in new low. Notice there's a 2-legged pullback and it's formed below EMA. Same thing right here. Short-term trend had a break in new low, but 2-legged pullback below EMA again. So that tells you that there's probably a slightly wider pattern, and you can take additional lower high, but always try to focus on the bigger pattern. Once this confirmation confirmed the trend line, stick with the bullish pattern, and the bigger patterns may take time to correct, but you expect still eventually to push above EMA and for prices to create new extreme eventually.